purpose of this webinar is to really give you a good idea of how to nail the buy, sell, protect parts with your own portfolio in order to accelerate growth and gain consistency with a process that's repeatable, regardless of how you prefer to approach the market yourself. We want to help you remove the emotion, the fear, the uncertainty that so often comes when running your own portfolio. Now, if you're a short-term trader, holding on for a few days or weeks, I'll show you how to time the cycles to buy when stocks break out and then sell at the right time to lock in profits so they don't turn into frustrating losses where you give it all back. If you're a longer term investor, I'll show you how to focus on the right stocks for larger growth, enjoying dividends along the way, while still being able to protect against the major market crashes. I'll do this with the use of our SPA3 Trader and our SPA3 Investor strategies that are part of the overall systemized investing program. So my name is Shane, and before we get started, I just have to point your attention to our financial services license to say that what I cover today is more general in nature and shouldn't be taken as specific advice as to which shares to buy, hold, or sell, and that past performance is not a true indication of future performance. Okay, so hopefully you're there asking yourself a few questions. Things like, what's in this for me? What am I going to gain? Can I trust these people? Why should I follow a strategy at all? They're all valid questions, and I'm going to do my best to answer them all for you over the next hour or so. And then we'll do question time for anything that I don't cover. There's also a great bonus at the end for anyone, if you can stick all the way, to the very finish. Now, we've been at this for the past 28 years, and what we found is at the end of the day, for you as an investor, it all comes down to these four main factors that you must consider before doing anything with anyone in regards to your money. They are, what sort of investments will you have to buy to get the overall performance that you want to achieve? And will you be comfortable in actually doing so? For example, there are plenty of crypto strategies out there promising the world. Don't get me wrong, some of them have absolutely killed it, but they're pretty high risk and usually high volatility as well. So how comfortable are you going to be doing that with a large portion of your money? Or on the other side, money in the bank is pretty safe, isn't it? But the performance has been pretty woeful over the last few years. So you have to buy or invest in something that fits your comfort levels and your own risk profile that's actually going to get you where you want to go in the time frame that you want to get there as well. The next part is selling. Will you be told when to sell? Or will you just get buying tips, leaving you to your own devices on when you think you should sell? Anyone can pick a stock or have an opinion. Hardly anyone's actually going to come out and tell you when to sell it like we do. Another question would be, will they help you protect your money from major market crashes? Or do you have to ride all the market ups and ride all the market downs and just accept big losses at times, like a buy and hold type strategy? And of course, repeatability. Will the process you follow be simple enough to fit in with your busy schedule and your lifestyle? And can you repeat it over and over again? Winning a one-time jackpot at the pokies or having one lucky stock pick, even if it might be, the next Afterpay or Amazon like so many promise, is hardly going to sustain you well into the future. So you need to consider how repeatable it is within your lifestyle, and how it just fits in with your life. And of course, there's also the fifth factor, which is in with anything, which is price. Are the first four actually worth the price that you pay? Okay, so let's start with the buying and the overall performance of things, and we'll use our SPA3 strategies as an example. So the two main strategies that people come to us for are called SPA3 Investor and SPA3 Trader. And as I said before, they're part of our overall systemized investing program. For those of you who aren't aware already, SPA stands for Sustained Profit Advantage. It's been helping investors achieve a better market outcome for the past 28 years. Both SPA3 strategies buy different stocks and they focus on different areas of the market depending on one's risk profile. But they've both had great long-term transparent results, not one or two lucky years or one or two lucky trades, but great long-term results. That's why we've got members that stick around with us, have been with us for the past 20 years, who are willing to go on record and share their results. No one's going to do that if it doesn't work for them. But I want to be open and honest with you. If you're here to make $1 million overnight, Neither SPA strategy is going to do that for you. And if you want someone to do all the work for you, this isn't it. However, if you're the type of investor who's looking for some structure on what to buy and what to sell, and you don't mind spending 15 minutes a week to manage things for yourself, that gives you complete confidence and complete control of your portfolio at all times, then stay with me. Because this is a tried and tested approach that's been working on the market for over 25 years now. The question for you will be, does it fit in with your personality and your personal risk file? So here's what I mean by that. Okay, so when talking about performance, SPA3 Trader has been around a lot longer than SPA3 Investor, and we started a public portfolio on January 25th, 2001. It buys across the entire 2,700 stocks on the ASX, so it covers the whole market. The idea of running a public portfolio that showed results in real time came from when Gary was invited to enter a trading competition run by Personal Investor magazine back in 2001. It went on to win the year-long competition, and we've just kept it going ever since. In the past 21 years, it's even been going longer than that. It's been going for 21 years, 22 years since 2001 now, 23 years since 2001, sorry. It's grown from $50,000 to over $684,000. Okay, sorry, my bad, 23 years there since 2001. I'm getting mixed up, now 2024. But that's growth of 1,369% over that time. SPA3 Investor, on the other hand, is a lot younger. When we went about designing SPA3 Investor, we really wanted a system where investors held on to stocks for a longer period of time and spent less time managing their portfolios on a day-to-day, week-to-week basis. So SPA3 Investor buys large cap household name stocks. It's much more focused. In 2015, SPA3 Investor was released, and then we started this public portfolio. And in the past 8 years, it's grown 159%. A great result for just 15 minutes per week of effort. Okay, over the same time, the market's only grown 45%. That's the all odds over that period of time, the largest 500 stocks in Australia. And this is real money. That SPA3 Investor portfolio is a real money, live traded portfolio in the market for our members to see every day. We also recently went through a big research phase to see if we can improve that even more. And we made the system even better for our members. Now, this is a simulated chart with the new rules built into it. Now, we found that if we added some extra criteria, like an additional stock filter, it helped us from getting into what are known as false breakouts in downtrending markets. And by adding this, we could dramatically improve our results overall. Now, of course, we didn't know back then what we know now, so that's why we show the 159%. But if we did know what we do know now, over the past 8 years, our portfolio could have grown even bigger than it has. Okay. Now the great thing is, though, that when doing all this research, we include it as part of the system automatically for our members, so they're always on the latest cutting-edge version of the system with the latest research. So it just becomes a free upgrade with all the new rules when we include it as well. Now, if we do look at some interesting times, if we look at the COVID crash, which I'll talk about more as we go through, but if we look at our real money portfolio and what happened during the COVID crash, this is about being able to protect, okay, you can see what happened. In 2019, 2020, when the COVID crash occurred and we moved our money to cash, you can see this flat spot in our portfolio. Okay, whereas the market and most super funds got hit big time. The market itself was down 35% in March, April 2020. Okay, these are the times you want to be out and you want to be sitting on the sidelines. Now, of course, that's an active portfolio. That's a less active portfolio. That's the market. But there's also the other favourite Australian investment, which is property, isn't there? Okay, and its performance. Now, how many of you own investment properties? I'm sure there's a bunch of you watching this that own investment properties. I can tell you that I do. It's not all about just shares or just properties. There's nothing wrong with having a bit of both. They say the average performance on property is that it doubles every 7 to 10 years, don't they? And that sounds pretty good, right? Well, how happy would you be if you could see your portfolio more than double, like in 4.5 years, like SPA3 Investor did, or 159% like it has now, or seen it go up by 1,369% in 23 years, like SPA3 Trader's done? You'd have to say that's a pretty good investment, right? That's why our members stick around. So much like property, stocks move in cycles. They'll surge and they'll pull back, or they'll surge and they'll flatten out. But unlike property, with stocks, if there is a big downturn in the market, it's really easy to sell and protect. You have a lot more flexibility with your investment, and you can just get out and protect it. You can just sell at the drop of a hat. Okay, we're coming up to the end of an 18-year property cycle that so many people are talking about a big reset in property in 2026 after the GFC that goes in 18-year cycles. Okay, hard to sell all your property really quickly. With shares, there's a downturn, easy, get out really quickly. This is where the buy, sell, protect come into it. And did you notice I never said the word profit here? And it's not part of the title of this webinar. Okay, the reason for that is if you get all the buying, selling, and protecting right, and then you can repeat it because you've got the right mindset to follow your rules religiously, the profits will take care of themselves, just like you've seen on our public portfolios. So before, when I said, you should be asking what's in it for me, after seeing the long-term transparent results of performance over so many years, you can hopefully answer that question right now. Performance is pretty good. That's what's in it, for spending a little bit of time learning the right strategy, but also getting the right mindset to follow that strategy as you're going along. Okay, great. So let's move on to selling and protecting and getting into a little bit of the nitty-gritty with that as well. Okay, so you see SPA3 Trader and SPA3 Investor are known as mechanical investing systems. This means that the way you achieve your performance and then you protect your profits is by following a really clear and highly researched set of entry and exit criteria in a simple process that you follow. You always know exactly what to buy and precisely when to sell. Nothing happens by accident, and all emotions are left out of it completely. Because when managing your money in the market, you should never have to second guess yourself or wonder whether to sell. Have you ever bought a stock that you read about, or you had a hot tip from a mate that you've watched go up only to hold on way too long when you should have sold? Giving back a bunch of the profit, or worse, seeing it turn into a huge loss. We've all done it, right? I'm guilty of that as well. In the moment, it's really hard to make a decision to sell because we let our emotions get the better of us sometimes, don't we? Especially in those stocks that were once so great, like Nanosonics that we can see on the chart here, and also Domino's. Okay, they had great runs, but last week they got smashed down over 30% each in a day. Okay, that hurts. And longer term, Nanosonics is down about 48% from its peak after it had that big run up. And Domino's is down a huge 76% after it had a huge peak during COVID, okay, when everyone was at home ordering pizzas and couldn't go out anywhere. So they had a huge run before that, but they've been smashed ever since. Okay, that's why SPA3, both trader and investor, use clear, unemotional exit signals designed to remove all the guesswork by telling you exactly when to sell, making your investing so much easier. It'll literally tell you when to get out, just like it did on these stocks as well. We can see on AGL and Appen here. Okay, you have the signals. They'll always tell you what to do at any time, and you just stick to them. That's why it works. You buy, sell, you protect, and then you just repeat it over and over and over again. It's so simple, and as I keep saying, it removes all the guesswork from your day-to-day. Now, the entry and exit signals are based on technical criteria that we've researched to make sure that your winning trades are much bigger than your losing trades. That's what trading with a positive mathematical edge is all about. So you can always be confident taking on the next trade and the one after that and the one after that, because you know you've got that edging in your favor. Your signals aren't about picking the very top or the very bottom of every trend. They're really about using timing to get you in and buying when a stock is beginning its upward trend. And then you hold on for most of that trend and most of that rise. Eventually, when it starts to turn down or lose momentum, your signals are about getting out and missing most of the downward trend. You sell and then you protect your money against major losses. I'll show you how it protects more on the charts as we go through everything today as well. Now, to get great long-term performance, as I said, it's not one or two trades. You need consistency. Having clear buy and sell signals that remove all the emotion give you that consistency always, because you can repeat it. When getting a hot, in comparison, I guess, when getting a hot tip from a mate or reading some story in the paper, how do you repeat that consistently over time? Unless you've got a really good mate that gives you lots of good tips all the time, how can you do it? You can't, right? Okay, that's why you've got to have strict rules in process that dictate what you do all the time in the market. Okay, so although your friend might have some good winning tips, it's very hard to repeat that long term, right? Even reading the paper, it's hard to repeat that over and over and over again. Make sense? Okay. Now, as well as the buy and sell signals, part of protecting your money is about having risk management criteria. So we always know exactly how much money to invest in any stock. Have you ever put too much money in a stock that you thought was good, only to see a shock announcement and you got burned? I've spoken to so many people over the years who have huge allocations in stocks that have been pummeled by bad announcements. They just didn't get out in time. Back to Domino's, I'm sorry, but was anyone actually holding it last week? Sorry to keep bringing it up if you were, but a 30% fall in a day is no fun for anyone, right? And that just rubs salt in the wound if you've held it all the way down. Okay, you want to avoid those big pullbacks if you can. So on that, let's look at this chart of ANZ from a few years back, okay? Yes, I know it's a little bit old now, but it helps to show my example well, which is why I still use it. I'll show you one on James Hardy later, which are actually pretty similar to this as well. But let's say with ANZ Group here, you had $10,000. You're trading, you had $10,000 before the COVID crash is what we're looking at here. Okay, now at the time, ANZ, they were trading at $27 a share. And you took the approach where you don't sell and protect. You just hold on, for example. Okay, now in March 2020, you had to watch your portfolio fall from $10,000, it fell 45% down to $5,500. Not much fun, right? Okay, and at that time, you're wondering how bad things are going to get. At 20%, is it going to get worse? At 30%, is it going to get worse? It eventually hit 45%, and you're probably thinking it's going to get worse. And you might have sold at that time as well. For those of you who've been through it, you'll know the kind of emotional roller coaster that it is. Luckily, though, things did turn around, and as you can see on the chart here, it picked back up. And after 14 months, it went down. It fell 45%. You went down to $5,500, and it grew, and it got all the way back to where it was. Sure, it was a rough journey with a bunch of sleepless nights in there, but you were back to where you were. Good job holding on. Or was it? Let's look at it another way. What if back here in 2020, before the crash, you had the rules to sell ANZ, okay? And you actually protected against the fall. First of all, you didn't have to watch it through the massive fall, and you slept much better sitting in cash while everyone else panicked, okay? There was a lot of panic around at that time. What's going to happen to the world? At this stage, instead of feeling hopeless in the moment, you're actually feeling pretty good about yourself because you're not going down with the ship. And importantly, you still had your $10,000 to invest because you didn't lose your shirt on the way down when it fell. So when ANZ did pick up, you had the rules to get back and take advantage of the 45% that came afterwards. There was a small little profit here, buy and sell, but let's say you didn't make much, but then you did get in for this 45% winner here. Okay, now your $10,000 is actually worth $14,500 over the same period of time. And the journey to get there was much less emotional and was actually enjoyable because you just sat on the sidelines. Now, $4,500 difference, maybe small to you, might be large to you. It's nothing to sneeze at. But imagine then being able to repeat that over and over and over again for a lifetime of investing. That's how you get ahead with your trading, okay? You buy, you sell, and you protect it over and over and over again, okay? Here you can see JB Hi-Fi where we get a buy. This is a recent chart where we have a buy. This is our unique buy-sell algorithm, which works as your protection along the way. If it falls below it, you get a sell. If it rises, it almost fell below it a couple of times here. If it keeps rising, you always know where you stand. Right now, if JB falls below $54.78, you're out. Okay, but we've bought, we've held, it's gone up, and we know where we stand. We don't have to worry about it. We don't have to have those sleepless nights thinking about what might or might not happen. You know you've got the protection in place, and you can just leave it. Okay, you worry about it on the day you buy in because you've got to buy it, and then you just hold on and you wait for your exit signal. Okay, that's what trading with a mechanical system, having a systemized process is all about. Okay, and then this is CSR, which again is another trade. We've got this in our public portfolio, which I'll show you those trades in just a second. But you're repeating your process over and over and over again. You buy, you hold on, and you wait for a sell. Okay. Now, we all know a portfolio is not going to go up in a perfect straight line, and losses are part of the game. Not every trade's going to be a big winner, and we have plenty of losses too, don't get me wrong. Okay, but it'd be fair to say that you want to minimize those losses and protect your money as much as you can, right? You want to sell before a big loss happens. If another GFC or COVID type event comes along and the market falls dramatically, you want to protect against that rather than just following it down like everyone else, right? So SPA3 protects in two ways. Okay, the first is on individual stocks, like we've just seen on ANZ. You can see it on Domino's. We saw it on Nanosonics. We can even see where we stand with JB Hi-Fi and CSR there. Okay, so it protects on individual stocks. You get that. Okay, the second though is on the overall market itself. When SPA3 Trader uses this more than SPA3 Investor, but this is the overall market risk. Okay, now with this, have you ever had the feeling the market was going to get a bit overheated, or it was a bit overheated, and it might be time to get out and protect? The market's had not a bad little run in the last few months, so you might be starting to feel a bit that way now, especially when we see something like Domino's just have a bad announcement, bang, down 30%. Things may be a bit tense, a bit nervous. But sometimes it's hard to pick. Maybe that's a really positive sign that the market has been going well and there's more to come. It's hard to pick where you are in the moment, isn't it? So SPA3 does have what we call market risk, and it's split into two categories. Firstly, there's a high market risk and there's low market risk. These are literally buy and sell signals on the market itself, kind of like a barometer on how the overall market is trending at any given time. If the market starts to fall, it'll tell you to get out and move completely to cash, protecting you from the carnage. And importantly, when the dust is settled and everything's a bit calmer, it'll give you a clear signal to get back in to take advantage of the rise that comes afterwards. It's what protects you from massive crashes like in 2008 in the GFC. And also, here we can see the high market risk where we exit the market completely and where we re-engage again. Okay, and it's also what limits losses back in March 2020. Okay, and now I know these are in the past, but market crashes are going to happen. So you've got to have something to protect, especially if you're getting closer to retirement or you are already retired and you don't have that ongoing income to keep topping things up as you're going along. Okay, we want to avoid those big crashes as they happen, don't we? When they happen. That's what it's all about, taking advantage of the market when it's rising and protecting against it when it's falling. Okay, so that's the idea. Now, of course, it's great having this type of performance and the protection against major pullbacks, but you may be asking yourself, how do you do it? Is it manageable in your busy life, and are you capable of doing it with your current skill set? Okay, will it be something that you can repeat time and time again? Sure, we can do it. We've seen the results of that. Okay, but can you do it with your skills? Okay, so let's have a look at that. So as I mentioned before, we have two strategies. We've got SPA3 Trader and SPA3 Investor, and I'm going to split this process section into two, as it's a little bit tricky to cover both at exactly the same time, even though the process is actually pretty similar. Okay, so let's begin with a closer look at the process of SPA3 Investor. So SPA3 Investor has been around since 2015, and it's the less active, simpler approach. If you were starting off, or if you wanted to ease off your trading, this is the one we suggest. We actually suggest that everyone does SPA3 Investor, and if you want to do SPA3 Trader, great, but SPA3 Investor first and then SPA3 Trader afterwards. Okay, so it's designed to give a focused approach and give you confidence investing your nest egg. Now, that doesn't mean that you have to do it with a lot of money. It just means the money that you want to take less risk with. Now, remember, it's about having a strategy that you're comfortable with and it fits in with your own tolerance to risk. So it could be a personal account, a family trust, or a super fund using anything from, say, $10,000 through to $10 million. It's a less active, lower risk approach, which is exactly what we were aiming for when we started researching it, because we already had Trader that did all the 2,700 stocks much more actively. So SPA3 Investor was designed to be all about focus. And by focused, I mean you get your results by buying into a specific range of 55 large stocks and there's 8 ETFs rather than investing in the entire market. So how does SPA3 Investor work and why can you be so confident using it? Well, it all comes down to timing. Both systems come down to timing. And to do that, SPA3 Investor uses an indicator we've designed, which you've already seen on the charts, for our buy-sell algorithm. It's this unique timing indicator that allows you to buy, that tells you when to buy, and importantly, it tells you when to sell. It's that big red line that we've seen on the charts already. It's been researched to work best on stocks that have big long trends up and big long trends down. So that's why it's focused on just a select few. It's designed to give you a buy when the price breaks out. It's not about trying to catch a falling knife on a stocks that are on their way down. We don't want to see you buy a stock thinking it can't get any lower, only to see it crash another 30%. It's about finding you the stocks after they've fallen and are beginning to rise again. It's then designed to give you a sell when the price begins to fall. Have you ever held a stock way after thinking you should have sold it? Then you've really kicked yourself for not getting out sooner? We've all done it, right? And there's nothing worse. Clear signals are going to help you avoid ever doing that again in the future. It's not about buying at the bottom or selling at the very top. It's about getting you in and taking advantage of most of the rise, and then it protects you and gets you out for most of the fall. So here's what it looks like on a chart of James Hardie. Now, again, this is a recent chart, and you can see it's actually pretty similar to what we did with ANZ, where we sell up here and we avoid most of the 54% fall that James Hardie's had, okay? Because you don't want to be in and watching it tumble, and you're losing money there and having the sleepless nights. So you get a sell signal and it gets you out. Now, then it's about giving you a buy. Now, the leap timing indicator, which is our buy-sell algorithm, is you can see that it gives the stock a little bit of leeway when it gets the buy. So when you get into it, there's a little bit of room here. So if it goes up and then pulls back, okay, if it's too tight, what would actually happen if, you can imagine if you were trying to get out at the very top here, if it was too tight, what would actually happen is you'd get kicked out all the time. So it would be following it along, and in a small pullback, you get kicked out and you'd be trading a lot more often, okay? What it's designed to do is give the stock a little bit of room to breathe, okay, a little bit of leeway, and then follow it up as it's going along. So here, a little bit of leeway, and as the price rises, it follows it up, okay? Then as it goes along here, it eventually starts to fall, and it breaks that. Now, at this point, we don't know if it's going to fall another 54% like it did back here. Okay, we don't have a crystal ball to know the future, neither do you. Neither do all those analysts who pretend to know exactly what they're talking about and what the future's going to hold, right? Some will tell you the stock's going to fall. Some will tell you it's going to go to the moon. Okay, we don't know. No one does. So we've got to have rules to deal with whatever happens. So in this particular case, James Hardie started to fall. You get an exit signal. Okay, no emotion, you sell it off, you go on to the next stock. Now, in this case, it did fall, fell about 15%, maybe 16, maybe 18% there, okay? And then it started to rise again. Now, we didn't get back in the bottom, but it rose quite quickly, so we got back in and off it goes again. And we'll wait and see. We know where we stand with it. If it has a good rise and it keeps going up, then the buy-sell algorithm is going to follow it up continually. If it pulls back, you're going to get a sell on it, okay? What we're not going to do is worry about it, because it's going to tell us to get out when the time is right to get out, okay? We can focus on doing other things that we like in our life, and that's the idea. So it's all about the buys and sells, but also about a process that you can follow and having a mindset of following that process as well, okay? Because there's times where the market will test you. There'll be all this noise bombarding you, okay? Now, the process of SPA3 Investor, which is pretty straightforward, is to hold 9 of these stocks, like James Hardie, at any given time. And on average, each trade lasts for about 4 to 5 months, depending on what happens in the market. Now, when you get a buy signal, you buy on a first come, first served basis. So if Fortescue comes up and you've just started off, then you buy Fortescue. And then if Westpac is next, then you buy Westpac. And you keep buying over the first few weeks until all 9 positions in your portfolio are filled and you don't have any more money left to invest. Then you simply just hold on until a sell signal's alerted, okay? The idea is to keep things super simple, and because they're all large stocks, you can invest the same amount of money into each trade. That's the nice thing with SPA3 Investor. It's super simple. So if you've got, say, $90,000, each stock that you hold would have $10,000 in it. If you had less, say $45,000, each position would be $5,000. And if you look, if you like to have a nice round number where you just hold 10 stocks, that's fine. You can do that too. But it's also fine. You might say, all right, well, I've got more than 90,000. I've got $1 million. And Shane, I'm just not comfortable buying $110,000 of BHP when it gives me a buy. That's just too large. I'm not comfortable with it. Okay, so that's why we always suggest you start small and you build up confidence, but also larger portfolios can hold more positions. So if you want to hold 15 stocks, you're not going to break the system. Okay, it'll just mean a little bit more work as you're going along. Rather than maybe 2 or 3 trades a month, you might have 3 or 4 trades a month if you're holding a larger portfolio. Okay, and that's absolutely fine. There's also strategies that if you've got a much larger portfolio than that, and we do have plenty of members that do, where ETFs come into it, and you do get the buy and sell signals on the ETFs as you're going along as well. Okay, so there's plenty of options depending on the size of the portfolio that you're running as well. Okay, and with it also, if you've got the data, you can use it on the US market as well. So with the US, there's 32 ETFs and 65 stocks that we track on the US market, and we've had some great trades on the US market. We had a really great run on the US last year as well. There were stocks like Nvidia that was up 161%, and you can see where, again, we get out on the fall, which the fall doesn't look that big, but it was 65%, and then it had a huge run up there. Okay, avoid the drop, get back in when it breaks out, follow it up. Okay, and right now we'd be in Nvidia still as it goes along, and we'd know where our protection is when we get out. Okay, we've got Netflix, which has been on a tear lately as well. Okay, Netflix was dead and buried, wasn't it? It was all over. Subscribers were dropping and their price was falling. Okay, now they've found a way to increase growth and they're back in favor with the market. So let's ride it up. If things go sour for them again, you get out, you protect, and you put that money into something else. And Amazon, strong as always. Again, these companies have big runs up, they have big pulls back. You can take advantage of those to help grow your portfolio much quicker than riding all the ups and downs, regardless of whether you're trading the ASX or the US market as well. Now, these are the 9 stocks that our portfolio, our ASX portfolio, holds right now. Okay, we're big believers in being transparent and showing results in real time, warts and all. So these are the actual trades that we hold in our portfolio for our members to see every day. So here we can see CSR. We've been in for a while. It's up 55%, or up $10,000. Breville Group up 3,000, and Beach Energy we only got into recently. Same with Flight Centre, but they're in the green at the moment. As I said, the market's had a pretty good run over the last couple of months. But quite often you will see, as I said, we have lost trades too. But quite often you'll see there'll be some red ones in here. The idea is making sure these larger trades, these winning trades are much larger than the lost trades trading with a positive edge. Okay, and as I said, this is here for our members to see every day. You can see it on your PC and keep up to date with what we're doing with our portfolio if you wanted to as well. Okay, it's something we've always done, as I'll show you towards the end as well. Okay, now there are 2 ways to get your buy and sell alerts. The first is with the SPA3 Investor app. Okay, now the app is looks like this. And the second way of doing it is on your PC. Now, I've taken a screenshot of the app, so it looks a bit prettier than this normally. I've just put it up on the screen. I've taken it from my phone. So with the app, you get a notification. Basically, what happens at 8 o'clock at night, you get a ding on your phone. It says, new signals today, and you open it up and see if there's any buys and sells. Okay. As you can see here, we had Regis Resources. It gave a sell last Tuesday on January 23rd. So at that time, if you were holding Regis in your portfolio, you would have gone into the market on Wednesday the 24th and you would have sold it off, okay? Now, that next day, Santos came up with a buy. Also, STW, the ASX 200 ETF, came up with a buy. We're sticking with stocks just for this. So Santos came up with a buy. So what you would do is you would then go into the market and you, from the money you had left over from selling Regis, you would go into the market and buy Santos. There's no emotion, there's no second guessing. You go in and sell Regis and you go in and you move on to the next one, which in this case was Santos. If you still had money in your portfolio after that, because let's say you sold another stock last week, Fortescue was the next one that came up as a buy. Okay, the system is finding the stocks for you. You're not having to do all that research yourself. The system is doing that based on the criteria that's already built into it. If you spent years trying to develop your own strategy and you're still not happy with it, you're still not confident, this is going to shortcut that whole process for you as well. Okay, and that's why people come to us as well. And then they come to us and we also teach you how to trade properly with the right mindset as well. Now, the great thing is, even if there's nothing to do, you'll still get a notification to tell you if there are no new signals today. That way you're never stuck guessing on what your action should be at any given time. You're always completely aware and completely in control of your portfolio. Now, as I mentioned, there is the second way to get your signals is by running a scan on your PC. And I'll show you the scan in a moment when we focus on SPA3 Trader, because it's the same process when doing both on the computer. So just to finalize on SPA3 Investor before we move on, it's our less active approach. The process focuses specifically on buying a range of large cap stocks and ETFs. It takes 15 minutes a week, and the signals can be received by the app or phone or an iPad, or by running a scan on your PC. On average, you're looking about 15 to 20 trades a year. It can be even less if you want it to be. You can invest the same amount of money into each trade, usually 9 to 10 positions, and the average hold period is about that 4 or 5 months or so. It's great for those who don't have much time, and the process is so easy that anyone can do it, regardless of their experience. That's why we say everyone should do SPA3 Investor, and some people, if you want to take it further and have a more active portfolio, should do SPA3 Trader. As well as that, the reward to effort ratio with SPA3 Investor is fantastic. What I mean by that is the results have been brilliant, but you don't need to spend a lot of time to achieve them. There's not a lot of time commitment to be able to do, to be able to run it, I should say. We go into more in detail during question time a little bit later on, but right now let's jump across to SPA3 Trader and its repeatable process. So as with SPA3 Investor, SPA3 Trader is going to tell you exactly what to buy. It'll tell you how much to buy, and importantly, it'll tell you when to sell and protect, but there's no app yet. We're working on it. So the app will come in the not too distant future. It's going through testing at the moment. But to do it at the moment, you need to run a scan on your PC, and the rules are a bit more complex. So that's why it's always been on the PC up until now. Now, because it covers the entire 2,700 stocks on the ASX, it needs to be more active, as it'll be in some of those smaller companies at times, which tend to move quicker. So you need to keep a closer eye on them. Make sense? But when I say active, it's not about becoming a day trader. Excuse me, a normal SPA3 Trader portfolio would average about 2 to 3 trades per week, depending on the amount of capital that you're investing. And your repeatable process is going to take about 10 to 15 minutes a day. So it's not huge in terms of time needed, but it is a little bit more of a time commitment in the 15 minutes a week that SPA3 Investor takes. Okay, so we say be aware of that. With SPA3 Trader, you want to get into some of the faster moving stocks at times, but we know that stocks that rise quickly, they also have a tendency to fall quickly, don't they? So you've got to have something to avoid those type of disaster stocks that fall 30, 40, 50, 60, 70%, 99% like Appen, because you couldn't bring yourself to sell. Okay, we want to take that out of it. For those of you who've been in stocks like this and held, you'll know all about the roller coaster ride, as we said before. It's great on the rise, but it's completely nerve-wracking on the sell, especially if you don't have an exit in place to know exactly when to get out. They might come back, but it could take years, and your money's doing nothing for you there. You know, plenty of people have those dogs in their portfolio. They've just sat there for years. That is that constant reminder, that red ink in your portfolio. Should have sold it ages ago. Now I'm stuck holding on to it, just hoping it comes back. Some will, but what could you have done with that money in the meantime had you sold back when it was a decent price? Could have taken that money, put it into something else that was growing and compound it as well. Now, holding on to stocks too often, like these, will destroy you in the market. So SPA3 Trader, it has about 10 different exit signals, all working in conjunction with each other, from profit stops to volatility to momentum-based exits. Whichever one gets hit first, you get a sell and you move on. So this exit here is a momentum-based exit on AGL here. So here we had a good run up. It was a momentum-based entry, and you can learn all the technical criteria behind it if you want to, but you don't need to be able to use it. A buy is a buy, a sell is a sell. So it has a good run up, starts to fall, you get a sell, and you get out of it there, okay? You don't need to watch it or even learn them all. The system tells you when they happen, so you can get out quickly and do it. But as I said, if you want to learn the system, the technical side behind it, the driving force behind all the different signals, the criteria is there, and it's detailed in our manual, so you can. Some people love it and they rip it all apart and they learn every little bit. Others couldn't care less because they're getting the signals either way. Importantly, it's not just about avoiding losses though. Okay, I've showed you a couple of big losses that it's helped avoid, but you got to make profits too. So SPA3 Trader is about getting into stocks when they break out, just like SPA3 Investor, and are beginning to rise. So Alligator Energy here, which you may or may not have heard of, was up 36% in 3 weeks before it hit a profit stop and it sold out. And we're out of it at the moment, okay? And that was just recently. That was just, the profit stop was a couple of weeks ago and we're out of it for now, okay? That was a genuine trade in SPA3 Trader that you could have bought, okay? Neuron Pharmaceuticals here was just before Christmas, was up 67% in 5 weeks. So when you ran a scan, it would have come up as a buy. If you needed a spot in your portfolio, you could have bought it at that time, okay? Okay, that also, it hit a profit stop there and it told you to get out. Now, this is not an accident. It's not a fluke. It's the system doing its job. It's exactly what it's designed to do. Buying, selling, protecting, and repeating, okay? Now, as you can see, we don't buy and hold. SPA3 Trader has short, sharp buys and it locks in profit along the way. Just like SPA3 Investor, SPA3 Trader is about being in for most of the rise to take advantage of those winners when they occur and out for most of the fall. If it ends up being a loss trade, get out quickly so it doesn't become a large loss trade and avoid those disasters. It just does it, SPA3 Trader just does it more actively on shorter cycles than SPA3 Investor, which gives the stock a little bit more leeway as it's going along, like I showed you with that buy-sell algorithm, the red line with SPA3 Investor. So it sounds simple, right? Yet it's easy to get this wrong if you don't have predetermined rules to tell you when to buy and sell. Because picking these points in the market in real time, it's really tough stuff, isn't it? When you're being bombarded with so much information of what's going on in the world, it can be confusing to work out just where the cycles are beginning and where they're ending, can't it? Okay, that's why you need a simple, objective, repeatable process that you can follow easily to remove the indecision. If you think about it as well, how long would it take you to analyze 27 stocks if you're doing it manually? Okay, you may, as I said, you may have heard of Alligator Energy, probably heard of Neuron Pharmaceuticals. Okay, you may not have, but because you've got a scan that scans 2,700 stocks, the system finds these for you in a couple of minutes, okay? It finds all the things that meet the right criteria, which is what I'm just about to show you here, okay? And what I'm about to show you is the exact process I follow to run that $684,000 every day with SPA3 Trader. Okay, so on your desktop, you will have this icon here, which is called Beyond Charts. Now, Beyond Charts is where you run your scan each day. It's a full-blown technical analysis tool where you can look at any stock in the market. You can overlay a range of different indicators. You can put all sorts of different technical criteria. You can even write your own formulas and backtest your own ideas if you like to do that. But if you just want to stick to the process like 95% of our or 99% of our members want to do, this is that process. Okay, so what you would do each day is very simple. There's 3 steps to buying. Step 1 is to run a scan of the market. So the way we run a scan of market is to come up to the Systems tab at the top here in Beyond Charts, and we run a SPA3 Trader new entry scan. If you're doing it with SPA3 Investor, you would do a SPA3 Investor ASX stock scan. But we're sticking to SPA3 Trader here, so that's what we're going to do. Now, what it's doing here, and you can see it racing through there, you have the choice of, you can run a scan for entry signals, so looking to buy a position. Exit signals are looking to sell. Pyramid is you've already got into a position, it's telling you to add some extra money to it. And then a lighten is to sell a 33%. Now, lighten the load. So a lighten can occur if a stock has shot up really quickly, so you're locking in some profit, or that it's a little bit volatile, so you're taking some out and as a precaution there, okay? And it's going to calculate that for you as going along. Okay, so what I've done, I've run a scan for buys. It's looking for stocks that are gaining on uses a momentum indicator called the SIROC. SIROC is short for Smooth Index Rate of Change, gaining on a weekly momentum basis and then a daily momentum basis. It's looking at the whether stock's outperforming the market or not outperforming the market, because if you're going to beat the market long term, you've got to make sure you're buying stocks that are moving faster than the market, right? So that's the idea. We're buying stocks that are moving faster. If they're moving slower than the market, they get filtered out, okay? It's looking at stocks that have enough volatility. By that, we want to buy stocks that are moving, but not jumping all over the place and and doing crazy things. And also enough liquidity, so you can buy and sell freely. So we've run the scan, and that's exactly what it's done. We've got the name of the companies, the sector they fall into, the signal behind it. You can learn if you want based around that so the weekly and daily momentum. Here it tells us to buy. So regardless of whether you know what the signal means, it's telling you to buy. You've got the signal date and the price, the action date and price, the market risk. Okay, currently the market is high risk with SPA3 Trader, and the sector risk, and the volatility. So this is the percentage of movement in the company. So 7% is quite a high volatility, whereas 1.8% is quite low, which is a stock like BlueScope, okay? We've got the market cap, so the size of the company in the market. Also the 0 trading days, the amount of days the company has not traded in the last 3 months, and liquidity, the average amount of money moving through the stock each day. Again, you want to be able to buy and sell freely as you're going along, so that's it's got to make sure for the size of your portfolio there's enough money moving through it so you can buy and sell. Okay, now we've run the scan, but how much do we buy? Now the way we work that out is Beyond Charts has 2 parts to it. The first is the charting side. When we can click into any of these, we can come in, we can have a look at the stock, and we can see the buy signal here, okay? We can see the previous buy signals, buy, sell, hit a profit stop, buy, lighten, sell, buy, sell. That was a loss trade. That would have been a loss trade there, but we don't hold on as it falls through. And then as it's buying, as it's come up here, it's a buy. Now you can come in and, as I said, you can learn all the technical criteria behind it if you want to, but day to day, week to week, you don't need to do any of that. Okay, but there's a portfolio manager, okay? It's a really important part of it. So the portfolio manager has all the rules of your portfolio. It's much like setting in part of the rules of a trading plan, so it's automatically set in place. So day to day, you don't have to think about your rules. Not only does it give you the buys and sells, but it tells you how much to buy based on the risk of the stock and the risk that you're comfortable with your portfolio. So what I've done is I've set up a portfolio with $50,000 with a risk of 0.9%, saying with that $50,000, if I buy a stock, I don't want to risk more than $450 on any trade. I don't want to lose more than $450 on any trade. Okay, it's super simple to set up. You just go new portfolio, and you would give it a name. say change shares, you put in the amount of capital, and most of the rules are already set in place for you. So the money management, well, that's a SPA3 Investor with the 9 stocks. SPA3 Trader, if you're using that system, has slightly different depending on the amount of trades. But as I said, between 40 and 80K, we have a risk of 0.9%. So these things are set out for you, but we also offer unlimited support. So we hold your hand through all of this process as well. Okay, and then you would also put in your brokerage costs. Now I've used Self Wealth, which is $9.50 per trade with that. Okay. So we've got these trades that have come up. All right, so let's say we're going to buy one. So as I said, 3 steps to the buy process. Step 1, run the scan. We've run 2,738 stocks, and it's taken from a whole market down to just 4. So it's done a huge filtering criteria for you to get to this point. Now here, we can go into any one of these and buy. Now, we can take any of them. Okay, some people will prefer to take those with the lowest volatility, so something like BlueScope in this particular case. So if we're going to take BlueScope, we highlight it, we click trade. And what it's going to do, it's going to tell you exactly how much to buy of BlueScope. So here you can see it's come up with BlueScope. It will literally tell you to go in and buy 176 shares at $23.54 each, taking your brokerage costs out for a trade value of $4,133. So if we don't want to risk more than $450, which is the rules that I set in at the start, and we're going to take BlueScope as a buy, then it's telling us to buy $4,133. Now, so you go into the market and you buy it. Okay. Now, at this point, you might get to the market and the price has gone up a little bit. Let's say it's at $24, and you would buy it. And here you're buying $4,214 worth. If you get it a little bit cheaper, let's say it went down to 23, which is a pretty big swing, I know. You spend a little bit less money, but you get it cheaper. And then all you do is you go in and you hit save. And from that point on, it's going to track it for you. It's going to have all the stats for your portfolio. Your portfolio manager is going to update automatically each day. Here we can come in and we can see the positions, and here we can see we've got BlueScope. So you would go in and fill up all your positions, but here BlueScope. So if we did buy it, we got it at that price. It's currently trading at $23.54, $85 up, and a net profit of 2.11%. And yeah, that'll change every day as it goes up as you're going along. So it's a nice and simple process as you're going along there. Now, we like stats. You can see all the stats on your portfolio. If you're going along here, you can come in and check the values of your portfolio. Here we can see Shane's shares. As at end date, my $50,000 has grown to $50,084. We've got 1 open position. We're invested 8% there, and our cash balance is there as well. Okay, you can see the detailed stats of your portfolio, your rules compared to the market, or your portfolio compared to the market over a particular point in time, your maximum drawdown, how much you've come from a peak to a point down, all your profit and loss trades. So all of that is recorded there. Also, there's a financial statement that keeps track of everything for you for the year as you're going along. So you can see it there, and you can print it off or whatever you like at the end of the year as well. So it's going to keep track of everything. You can see all your transactions as you're going along here as well. We've bought $4,048 with, plus the brokerage costs there as well. So you've got an itemized transaction by transaction list there. Those of you who are spreadsheeting, doing all this analysis yourself, it's going to save you heaps of time. Okay, now that's buys. Now, of course, once you got in, you got to know when to get out. And for most people, that's the hardest thing, right? Knowing when to sell. It's really easy to go, I should sell today, but I'll just wait and see what happens tomorrow. And tomorrow comes, and you say, I'll just wait and see what happens tomorrow again. 3 months later, it's fallen 30%, and you're kicking yourself. We have a day like Domino's and Nanosonics did last week, and it drops 30% in a day, and you're kicking yourself because you didn't listen to yourself. Having sell signals stops you from doing that. But how do you look for them? So the way we look for sells is the same way we look for buys, except rather than scanning the entire market for sells, you have a SPA3 Trader portfolio scan, which will scan the shares that you're holding in your particular portfolio. Okay, so here we can see this is our public portfolio, the one we run. It's currently holding 14 stocks. These are 3 sell signals that came up last night with it. So if we wanted to come in and look at these, we click in, we've got Drone Shield here, we can come in, we can zoom in, we can see here was a buy, here was another buy. Now I'm not making this up. This was an actual sell in our public portfolio that I have to sell off today. This is our SPA3 Trader public portfolio. So this was a buy, this was another buy, and what I have to do is I trade on the signal, and we'll have it for our public portfolio, SPA3 Trader ASX, and this, obviously it's a much larger portfolio, so the position is much larger. It's telling me to sell the $26,368 worth. So that'll get sold off today, and that's a trade in our public portfolio along with those other 2. So that's the idea. Yeah, you can see the other 2 here. We've got Liberty Finance, which was a trade. Oops, sorry, I'll show you the chart. Again, not made up. This was a buy, Pyramids, and a sell there. And the other one we had was Capral Limited, CAA, where we had a buy, a pyramid, and a sell based on the momentum there. And you can go back through history and you can see all the past signals and everything like that as well. It is a full-blown technical tool that you can overlay all sorts of different indicators if you wanted to put them on your charts. For example, Bollinger Bands or MACDs or RSIs or whatever you want. But day-to-day, week-to-week, no need for any of that. Okay, so do you get it? It's pretty straightforward. Most days, what you actually do is you just come in and you run that portfolio scan over the shares you've got, because if you're fully invested, you're not looking to buy anything new, you're just looking to sell. If nothing comes up, which will happen most days, shut it down. Come back tomorrow. You're done in 2 minutes. If something does come up, you sell it off, run your scan to look for something else to fill that spot. And that's it. Okay, that's the idea. That's what having a process is all about. Okay, and then it's about, as I said, having the mindset, the right market psychology to follow that process day in, day out, blocking out all the noise, anything that's going on in the market. So that's it. You know, as you can see, the repeatable process is a little bit different for both strategies. You know, it's a little bit different. So just to recap, the main differences between 2, because I know there's a lot of information, the main difference between the 2 programs are they use different technical criteria for their buy and sell signals, and they look at different cycles. SPA3 Traders shorter, SPA3 Investors longer, and they focus on a different universe of stocks. So for someone who wants their process to be less active with a focus on large stocks and only spend 15 minutes a week, SPA3 Investor is going to be the best option. With only 2 to 3 trades a month on average, after you're up and running. Obviously, in the first few weeks where you're trying to fill all 9 positions, you might be a bit busier as well. But it's really easy to manage on an ongoing basis using either the app on your phone or iPad or on your PC there. Whereas if you prefer your process to be more active and don't mind spending 10 minutes or 10 to 15 minutes a day on your computer, and like the idea of investing in stocks across the entire ASX, from the small caps all the way through to the big end of town, then SPA3 Trader is a great option as well. However, if you're like many of our members who like to do a bit of both, then both systems might be suitable for you. But whichever you choose, with both SPA3 Trader and SPA3 Investor, we provide a whole lot of education and unlimited support along the way, along with all the tools necessary to be successful. And as I said, as a package, it's called the Systemized Investing Program. Okay, so we've covered all the buys, we've covered the sells, how it protects your money, and the repeatable process that's resulted in great performance all the way along. So now comes down to the price, right? And what you get for being a member of the Systemized Investing Program using SPA3. You know, we want you to become a successful investor with strategies that you can use for the rest of your life. So we provide everything you need to become successful in the market long term. So included in SPA3 Investing Program, we firstly include the strategy. The Beyond Charts is the software. as part of that strategy. So it's everything I've shown you today with the charts and the scans, a full-blown technical analysis package where you can even write your own formulas and do your own back testing if you wanted to. There's a portfolio simulator if you wanted to see what's SPA3 Investor done over the last 10 years, like I showed you with the 8 years with the simulation there. There's also the portfolio manager to keep track of everything as you're going along. You know, it's a complete money management tool, financial statement, profit and loss records, you know, a trade and risk management calculator, but also you can draw your own portfolio equity curves, and you can run as many portfolios as you like within the systems. So you can have, you know, a personal portfolio, a self-managed super fund, family trust, whatever you want, husband and wife portfolios, whatever you like. I've got one for my kids as well, one each for my kids. The great thing with the portfolio manager is it'll simplify all of these things and calculate all the positions for you automatically and does all that reporting for you. So it keeps things very, very simple. You're taking the complex and letting the machine do the hard work for you. So as I said before, anyone manually spreadsheeting using Excel or Google Sheets or something like that will know how valuable it is and save you a heap of time. Now, of course, the package we're offering today also includes all the SPA3 stocks, the ETFs, and the market risk signals. So you'll know when to buy, exactly when to buy and what to buy. You'll know exactly when to sell, and you'll know when to be out of the market completely and protecting your capital, which could literally save you hundreds of thousands of dollars over your lifetime. Not an exaggeration. In 2008, I should say, the GFC saw a market fall of 54%. If you're retired or just about to retire and you're not protected in a crash like that, that can be crippling to your portfolio. That can be crippling to your retirement, okay? Someone with super of $500,000 then that followed it all the way down was left with $250,000. Imagine how you feel in that moment. I speak with so many people who still feel the horrible effects from that today, 16 years on. Think about how much you have in your nest egg right now and what it would mean if you lost half of that. It's devastating, right? Just one market crash avoided and you're way ahead. Being able to protect your capital is critical if you're planning to be in the market long term. And to be honest, most of you are going to be in the market long term, even if it's just through your super fund as well, okay? Because they're exposed to the stock market. So you want to have something to protect that as well. Now, to help you keep on the right track at all times, we offer unlimited support. That's by both phone and email. We are really here to help you every step of the way, to be your accountability buddy, so you always have someone to contact along the journey. So when you start off with your membership, it'll begin with a one-on-one personal onboarding session with one of our team to help you get off on the right foot. We'll then hold your hand all the way through it, keeping you accountable to achieving your long-term investing goals. You know, again, we want you to be successful with it just like you want to be successful. So we'll help you stay accountable. And we've got a few ways of doing that as well along the way. We'll also give you access, and this is huge, to our brand new 4-week process and mindset training that Gary's done, and you know, where you'll complete 8 specifically crafted lessons that's going to ensure you create unshakable self-trust in yourself and your confidence in your trading process. And you're going to say goodbye to all the negative feelings that you've had previously or likely had previously with your investing, okay? This is huge. I can't stress how important it is to get the right mindset, the mental fitness with your investing. You know, it's about learning to leave your emotions at the door, trading deliberately and making calculated decisions at all times, with none of the second guessing and none of the constant worry. Okay, we've had members that have, or people that have done this process and mindset training that have been with us for 20 years. As I said, it's new, or that have been out of the market or in the market for 20 years, not using our system, that have said it's absolutely changed their lives. The way they think about the market has completely changed. So it's really worth focusing and doing that 4-week process and mindset training intensive as well. Gary's done a great job with it. You'll also get ongoing access to our exclusive online education center. This is a great resource of videos, coaching notes, trading plan templates, giving you all the education necessary to become a successful investor long term. You also get access to our exclusive members forum, where you really do become part of our investing community, and you can ask questions and bounce ideas off similar minded investors on a similar path to you, just like these members who have been with us for years. Now, I'm not going to read these. There are heaps of these on our website under the testimonial section. You can go in and jump in and have a look at those afterwards. Okay, we get so many people referring us to their friends and their family, and we feel really appreciative, and we feel really lucky that we do get that happening as well. So that's a nice thing. As part of the education, we also run fortnightly online user group meetings run by Gary. You might have seen his What's Up with the Markets on YouTube as well. These are coaching sessions with Gary himself. Sometimes it's general market education, sometimes specific market analysis. Other times it's just a straight Q&A where he'll answer questions. But in every session, you do get to ask questions of Gary and learn and soak in his decades of market experience as well. So they're a really great session where you get access to Gary there. Also system upgrades. If we research and find a better way to do it, much like I showed you before, we include it as a free upgrade. That way you're on the latest cutting edge version of the system with the latest cutting edge research as well. There's also, as well as the 4-week intensive, there's also 2 investing courses, the Blueprint to Wealth Investors Club and the Transform Your Investing video series as well. So they're great. Building to retirement, the Blueprint to Wealth Investors Club is a great thing to that, and also to teach your adult children or your teenage children about investing without being too active as well. As well as that, we also do a weekly training session on a Monday morning with Dave McCulloch, our lead educator, where he goes through all the different signals of the week and also anything to keep an eye out from on the coming week. He also updates our public portfolios and keeps you up to date with everything in those as well. So it's great with those. Dave also does a Q&A session in those too, and they're all recorded so you can watch them at a later date. And of course, you can call us any time and we can do a one-on-one session with you at any time. But that Monday morning is just a great time, a formal session that we set aside each week. They only go for about 15, 20 minutes each time as well. Now, as well as all of that, and I know the list is pretty long there, we're getting through it, we're almost there, daily stock market data. So you get all the data with buys and sells on stocks and ETFs, or both, depending on the system, world indices, Forex, futures, valued at $900 per annum. And you'll see these values popping up on the side there. This is not what it costs. This is just the value of each individual thing. And importantly, we also offer a 30-day money-back guarantee. We want you to be happy and we want you to continue on as a member for the next 20 years, like those other members that I showed you before. But if you don't find it suitable for any reason whatsoever, then we'll buy the system back off you. Now, with that, there's no sneaky rules or tricky fine print, just a genuine offer because we want the best for your investing, and we know you'll love it. We can do it because people don't take us up on it. But if you do, that's fine. We'll happily give you money back as well, and that's fine. So if we add all of that up, it comes to a huge total of $10,367. But we don't charge that, even though many in the industry do charge similar, and they tell us that we could too. You see, our members tell us this kind of hand-holding support and ongoing education is invaluable, especially, as I said, the 4-week training intensive as well, plus with the strategy you can follow all the way along. And that's really what drives our passion to help people. We know of plenty of other companies that charge between $5,000 and $10,000 a year just to be part of their inner circle, offering a lot less than the systemized investing program offers. Okay, not to mention, financial advisors who charge more than $20,000 a year to manage your money, or not even getting results as good as the market, let alone results as good as we've seen. But those sort of costs, they add up massively over the years, especially with the financial advisors and planners. But we're big believers in keeping our systems at a fair price, one where our members get fantastic value for their money and the price doesn't increase depending on the size of your portfolio or the amount of portfolios that you run. So with that said, we're happy to offer you a special discounted price for the systemized investing program with SPA3 Investor for only $19.95. Which is $300 off the regular price of $2,295, or SPA3 Trader for $2,195, saving you $300 off that system. So with both, you get all the education, all the support, everything else. Just SPA3 Trader is a little bit more than SPA3 Investor because it covers a bit more of a broader market. But again, if you were just starting off, we'd suggest starting with SPA3 Investor. You can always upgrade to SPA3 Trader later on. Now, that is a once-off price that you never, ever pay again. However, if you feel like you'd like to do both systems, okay, you want to have a bit of, maybe most of your money in SPA3 Investor, but you want to get into some of those smaller stocks with SPA3 Trader, then we've got a great bundle price of $2,495. So that's saving you $1,500 off the retail price of the bundle of both. Now, the only ongoing cost to using the system that covers all that I've just mentioned, the data, the support, the upgrades, all the ongoing education, plus access to the brand new 4-week process and mindset training intensive, is just $85 a month or $900 per year for the ASX. And if you'd ever like to do the US market too, being a second market, it's just $27.50 a month. Or if you just wanted to do the US, being the first market, it's $85 a month or $900 per year. And US can be added at any time as you're going along. Okay, and if you look at your trades over the past few years or how your superannuation fared through the COVID crash or even the GFC, if you were in it all the way back then, I'm sure you could see that $19.95 is a small price to pay for such peace of mind and protection from large losses with clear signals on when to get out. Not to forget how much each system has grown over time. So if you think about it, on that growth side, what would more than doubling your portfolio in its 8 years like SPA3 Investor has done look like in dollar terms right now? You know, an example here on $50,000, 155% growth, it's actually 159%, it's gone up a little bit in the last couple of days since I did this slide, would be worth $127,500 today, okay? $100,000 portfolio would be $255,000 a day. I could go on, today. I could go on, but you get what I mean there, okay? For every $100,000, it's an extra $155,000. You know, just multiply it there, okay? The $19.95 and the annual membership pales in comparison to that, doesn't it? And you've got the money back guarantee to cover you in those first 30 days anyway. Now, although the webinar price of each system is already great value, as it is, especially considering what you actually get to help you achieve over the long term, because you've spent the time here and made it all the way to the end, as I said, we've got a great extra bonus for you. If you're one of the first 10 people to join, we'll include your membership free until the end of March 2024. So that's an extra saving of $170 there. Now, these special prices, we're right at the end of the month, are only available until tomorrow, which is Wednesday, the 31st of January, and the free 2 months extra membership is strictly for the first 10 people. Okay, I imagine that'll go pretty quickly after this. So that's it. You know, hopefully now you can see that SPA3 members always know what to buy and when, why we sell when a stock begins to fall in order to protect against major losses, and then how we repeat it over and over again for great long-term performance. We don't know of any other company on the market that's willing to put it all out there, draw a line in the sand and tell you exactly when to sell and then show their performance, warts and all in real time, like we've done for you, okay? And we've been doing that since 2001. Now, do you remember all the way back at the very beginning, one of the questions I said you should be asking yourself is, can I trust these people? Hopefully you've been following us for the last 10 years and you know we're legitimate, we've been around for a long time. If you're only new to us, let me show you something, okay? This is a slide from a webinar I did 6 years back at the beginning when that was a webinar in December 2017, okay? You can see that at that time, 6 years ago, that SPA3 Investor was up 40.17%, okay? What I'm showing you today is not made up with the benefit of hindsight. You know, we've been showing this in real time all the way along, okay? Those of you who've been around for a while, getting our emails, joining my webinars for a long time, will know we show this all the way along. This is the exact slide that I showed on the 19th of December, just before Christmas in 2017 there, okay? Here are the trades that we were holding at that time. There were 5 stocks that we're holding, 4 in the green, there was 1 in the red, and you can see our portfolio is only worth $112,000 there, okay? We show our results in real time always. Yeah, and when you become a member of Share Wealth Systems, you're not joining a startup company, okay? And you're you don't have big risks that come with a startup company. We've been helping investors just like you for over 28 years now and have the runs on the board to show for it. The results our members have achieved for the small price they pay speak for themselves. So if you're interested in having a chat to ask some questions or would like me to show you through things personally, or you'd like to invest join our investing community right away, please feel free to give me a call after this on the phone number here, 0395850300, or you can email me, shane@sharewealthsystems.com, right after the webinar, or you can 1300 stocks is also our phone number.